Private Placement, Due Diligence, Term Sheet, and Regulations. This is for Finance 139, and it's by Daniel Andresen. We'll begin by discussing the importance of legal documents. Legal documents can be found all over in the corporate world. Whether we're looking at small businesses or large businesses, they all need to have legal documents to maintain the integrity and the future growth of their company. Legal documents are exactly what they say. They allow for accountability in the business world. They provide structure and standardization across all levels of business, and they protect the parties involved in legal transactions or mergers or acquisitions or any such thing that goes on in the world of finance or business. The first item we'll be discussing is due diligence and what it is. Due diligence is the process of investigating or auditing a potential investment that a company might make. Essentially, it's the company's way of doing their homework to make sure investments are sound. It involves an in-depth understanding of how funds will be used. In order to do this, one must understand the business model and the budgets involved. To continue with this in-depth analysis, analysts are required to review all financial documents thoroughly. This is to protect themselves, and they're going to have to review documents such as the balance sheets, the financial statements, the income statements, the cash flows, anything that is pertinent to the asset they want to purchase or sell to. They are going to have to look into and make sure that it's solid and has a firm foundation to build off of. And the main purpose ultimately is to prevent unnecessary harm from coming to either party involved in the investment. And what this means is there just needs to be a lot of transparency and a lot of research done before any large purchase or sale can be made from one company to another. The next thing we'll be discussing is the term sheet. The term sheet is a non-binding agreement that addresses basic terms and conditions of a financial agreement. Essentially what the term sheet does is it helps the two companies or the investor to iron out the major details that the two parties in negotiations can deal with themselves. What this does is it creates a high level of transparency between the two parties because they are allowing a certain document to establish all the major grounding and foundations for everything that they'll be doing in the future transaction. To continue on, the term sheet ultimately lowers the overall cost of the negotiations. And by this I mean it eliminates the need to bring in expensive legal consultants until the very end of the negotiations process. The two parties involved can actually negotiate and hammer out a lot of the major details on the term sheet, and then after the groundwork has been laid, then they can bring in legal consultants and the expensive legal people that are going to have to make it official. And it just makes sure both groups are in agreement with each other, and it allows for, once again, transparency and integrity within the transaction. The last thing we'll be discussing is private placement memorandum. Private placement is a private issuing of shares for a company. The memorandum is much like the kind that is received by investors for stocks, mutual funds, or other publicly traded securities. Included in the memorandum is details of the overall investment in question, requirements of the investor, and disclaimers regarding the business as well as its equity. To continue, the private placement memorandum includes the term sheet, the legal disclaimers, as well as the risk involved. And what this means is it contains basically the agreements that the companies have already made in terms of the transaction, as well as some legal disclaimers in regards to those people that are looking at investing or trying to figure out what's going on with the actual transaction itself, and the risks involved. And what that means is how much the value is going to be diluted by the change in equity or other such related factors. And ultimately, the PPM serves as the one-stop shop, basically, for information regarding the transaction or the investment that the company is making and the ramifications that are going to result because of it. That concludes my presentation. Thank you, Papa Shiroki. Thank you, class, for listening. Man, I really hope we get out of class early today.